At stake for the energy markets if President Trump makes good on his threat to implement tariffs next week. Let's get more on that from Pippa Stevens. She joins us from our headquarters. Pippa.
Hey, David. Well, even the reduced tariff of 10% on Canadian energy could rock energy systems and lead to higher prices for consumers. The U.S. is the world's largest oil producer, but we still import roughly 6.6 million barrels per day of crude, more than 60% of which comes from Canada. Much of that is what's known as sour crude. The U.S. primarily produces light crude oil, and so refiners can't just switch gears. Patrick DeHaan from Gas Buddy said this could ultimately lead to as much as a 25-cent increase on prices at the pump in the short term. Now, should Canada retaliate with export tariffs, prices could go even higher. Now, on the nuclear side, the impact could be even larger. The U.S. imports almost 100% of its uranium, with more than a quarter coming from Canada. As Segra Capital put it, the only credible path to U.S. fuel security is to have stronger ties with our northern neighbor. Now, much of that uranium comes from Cameco, which has tariff clauses in many of its contracts, meaning the off-taker will have to pay the higher price. In regulated utility markets, think Dominion, Duke, Southern Company, and Entergy, fuel is a pass-through cost. So if the utility is paying a higher price, that ultimately winds up on consumers' bills. Guys?
I know you mentioned uranium. We are expecting this deal between the Ukrainian President Zelensky and President Trump, where the U.S. would share in profits from rare earth minerals. And I just wonder how big of a player Ukraine is and whether this is any kind of game changer for the United States.
So they are certainly a big player in terms of their reserves, but the problem is it's very different to have proven reserves and to have actually accessible reserves. And there are some parallels here with what we see with Greenland in the sense that their geological surveys show all these deposits. But if it's really hard to access, it might not be economical. And that's really why we haven't seen Ukraine be a larger player thus far. They have all these deposits, but so far, prior to Russia's invasion, they weren't able to attract foreign capital to have that investment, to have those partnerships in order to access all of that. And so this is certainly, beneficial for Ukraine in the sense that they need that foreign capital to come in. Of course, we're still waiting on some of the finer details on how this partnership would actually work in the percentage breakdown here. But if we are actually able to tap those, it could be a game changer. However, this is probably at least a decade plus down the line, given how long it does take to bring some of these deposits online, especially in regions that Russia has annexed.
Yeah, not to mention the lack of commercial mines and even some debate about whether or not the reserves are real. Maybe we'll get some clarity on some of that today at this event. Thank you, Pippa.